Hi everybody, welcome back to the channel, and today I thought we'd talk about a new ETF actually that I had a couple people in the comments mention this to me, and this is going to be one that's focused on high dividend yields. Now there's drawbacks to these types of ETFs and there's also benefits. Now one of the main benefits is going to be that you're going to substantially increase your initial yield on your investment. So, relative to, let's say, a dividend ETF that might pay 2, 3, 5% on a dividend yield, this one right now is paying 11.75%. And this ETF that we're talking about is the NEOS or NEOS S&P 500 High Income ETF. SPYI is the ticker symbol. And you'll see that the annual dividend is $5.87. The dividend yield is 11.75%. So given these numbers, we can kind of do some math, and depending on how you calculate this, for example, you could take 10,000 shares of this ETF and simply multiply it by the amount of the dividend, which was over $5 per share. So even assuming, $5 dividend per share on an annualized basis, you're talking $50,000 per year in income just on a 10,000 share investment. Now that's still a lot. I mean, you're talking $500,000, right? But at the same time, you're getting more income. Basically, you're getting more bang for your buck is a good way to put it. So with that in mind, we have this ETF that pays pretty high dividend yields relative to other ETFs. But then the question becomes, what are we looking at in terms of capital appreciation? And as you'll see over the last several months, we have an ETF that was trading at $45 per share, and now it's trading at $50 per share. So the low in November was $45. Now we're talking $50 per share. And that shows you that there is the potential for some capital appreciation. For example, if we look over the last year, we're only up 2.77%. Over the last 5 years, really since 2022, since this is when the ETF came into inception, we're up 2.92%. Now, over the last 5 days, 0.85%. So the short term is not really that important. The longer term trends are really what matters. Because if you think about this, the S&P 500 is up a lot more this year than 2.77% or over the last year. Now, year to date, this is up 4.16%. If we take a look at the actual ETF, the SPYI ETF, you can see that we are up 26% in the last year. And year to date, we are up 12% or over 12%. So that just shows you the trade-off you're making with an ETF like this. Although you're getting those high dividends, you're not going to participate in nearly as much as the capital appreciation. So you'll see here, according to FinViz, we have $5.87, 11.73% dividend yield. But like I said, there's always a trade-off. You're not going to have your cake and eat it too a lot of times when it comes to this kind of stuff. But what you can think about is long-term, what are your goals, right? What's your risk tolerance? What's your investing goals? Because when we look at a volatility index of something like this, or the relative volatility to, let's say, the major indexes is what I'm trying to say, we have a beta of 0.70. Now, a beta of 0.70 is less volatile than the S&P 500. So given that this index is related to the S&P 500, that is a great way to look at volatility and the perspective of this, right? Because the fact is, if you're looking at comparing this to the S&P 500, you want to look at both volatility in terms of your risk tolerance and, in addition, the potential for capital appreciation. Now, in general, something that's less volatile will produce less of an upside potential. So that's what we're going to see here. But like I said, that income, especially if you're in retirement and you're looking to pay your bills, let's say, can be very, very beneficial. And when it comes to something like this, keep in mind, like we were talking about, we have the actual dividend of, let's say, and that's the wrong ETF. I don't know how that happened, but it's the SPYI ETF is what we need. We have the NEOS S&P 500 Income ETF, and just ignore the background noise. I have 3 kids running around the house. I apologize. So $5.87 is the annual dividend, 11.75%. And so we have 0.4892 as the most recent dividend, for example, 50 cents per share over the last month. And to wait for the room to clear out here. So 50 cents per share for the dividend in March. And then in February, we have a dividend of 0.4967, 0.4896, and so on. So if you look at this, guys, from the perspective of, let's say you're an investor who just entered retirement, or perhaps you're looking at solutions for your retirement. Let's say you have a 6-figure or 7-figure stock market portfolio, and you're looking at an ETF or a series of ETFs. You know, I've talked about other ones on the channel as well, such as JEPQ, JEPI, or JEPI. All of these ETFs pay these above average dividend yields, and the idea is that you're going to get the regular income streams for your retirement portfolio if that's your goal. And so that's what's so exciting about this, especially that it pays on a monthly basis as well. And if you're in retirement, or if you're looking at retirement cash flow, monthly dividends just are better overall. It's better for cash flow management in terms of paying your bills. And so that's kind of, I think, what this ETF would be geared towards, is a retirement investor who's seeking that regular income. Now, one thing I want to mention with this ETF as well is that you'll see here that we have the objective of generating income from the basically S&P 500 index and implementing a data-driven covered call option strategy, or call option strategy. Now, it actively is managed by NEOS, NEOS. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options, which are classified as Section 1256 contracts and thus subject to lower 60/40 tax rates. So this is one of the actual benefits as well of potentially investing in this ETF, is that you're going to get better tax treatment on those dividends. Now, if you have this in a Roth IRA, it's already going to be tax-free. If you have this in a taxable account, it can be a significant difference. So keeping that in mind, this fund utilizes a call option strategy that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. Now, we've seen that, like I said, over the last year, this ETF's up 2.77%. You know, big whoop about that, right? I mean, it's not that big of a deal in terms of going up that much. You have a little bit of upside, but what's going to happen in a downward trending market? That's another consideration. That's always a risk with these ETFs. Will they underperform in downward trending markets? Yes, you're getting less volatility, you're getting more income, but what is the trade-off long term, right? That's always a consideration. I'm not saying these ETFs are bad. In fact, I really like these ETFs. If you're looking at this for a retirement strategy or something in terms of paying your bills every month and looking at consistent cash flow, these ETFs can offer a pretty good solution, in my opinion, especially for those who don't like as much volatility, because, you know, as I was mentioning, the beta for a lot of these ETFs will be less than 1. And when you have a beta of less than 1, that means it's less volatile than the S&P 500 or the major indexes. And like I said, if you have this in a taxable account, or let's say a traditional IRA, although those, you know, IRAs are a bit tricky, right? So like a Roth IRA, it's going to be tax-free. Traditional IRA, you're going to pay ordinary income on those distributions. So really, if you have a regular taxable account and you have this in your brokerage account, that's when it can get interesting, because then you have the potential for better taxable income, basically more favorable taxable income instead of just regular income. So there could be preferential tax treatment. But always talk to your tax advisor if you have one, and always, you know, think about this from your own perspective, because it really depends on where you're investing, if it's tax sheltered or not, and also how old you are, and if you're already in retirement or if you're looking to go into retirement. So there's a lot of factors to consider here. But here's some of the fund information. You'll see the gross expense ratio is 0.68. Not the cheapest, but it's not the most either. You know, we're not paying over 1% per year. It's simply deducted from the annual return. You have net assets right now of 1.3 billion, so definitely a lot. just over 26 million shares outstanding. That's really not as important. But we have a distribution frequency, as we've talked about, on a monthly basis, and you'll see the ticker symbol SPYI. So if you call your broker and you say, hey, I want to buy some of these shares, you just give them the ticker symbol, and they'll be able to buy some of these shares for you. Now, finally, you'll see on top here the distribution yield, 12.1%, which is the annual yield an investor would receive if the most recent fund distribution remained the same going forward. So, with that being said, this is an ETF to consider if you're, like I said, looking at retirement. Maybe you just want to have an income stream. You have some extra money you want to invest and you're looking for a passive income stream. This could definitely be something for you. That's what I love talking about on this channel, is passive income ideas and strategies, different ETFs. So thank you for the people in the comments who brought this ETF to my attention. So, it's one of those things where there's all these opportunities out there, and this is just one of them. So with that being said, guys, thanks so much for tuning in. Hope you enjoyed this video. And let me know what you think of this ETF in the comments down below. It's a relatively new ETF, but definitely interesting for sure. And let me know if you guys have any other ETF ideas in the description that you want to see on this channel and I can discuss in the future. So thanks so much, and we'll see you guys in the next video.